Been a very good week for the market so far. We're looking at a straight day of gains if the market were to close higher today. Got that. Here's a look at the closing numbers from yesterday. We're very roughly, 1,400 points away from the all-time high for the Dow Industrial Average. Come on in, Jim Rickards, Meraglim, Chief Global Strategist. Okay, when I say is the worst over, I mean is this intense selling over?
It might be for the very short run, Stuart, but it could happen again tomorrow, it could happen again in a few weeks. What you have to ask yourself analytically is, why did the market go down and what has changed? It went down for the reason you've been mentioning, which is the debt bomb. The market woke up all of a sudden between the tax cut, there's taking off the spending caps, student loans, which no one's talking about. Those bad debts are starting to come due. People are looking at trillion-dollar deficits as far as the eye can see. So the market reacted to that. The inflation thing's a red herring, that employment report on February 2nd. Okay, so the debt bomb is one issue. And then the other one is the derivatives. Think, you're walking across a field, but it's actually a minefield. And you're worried, you have no map, and you're worried about stepping on the mine.
That kind of
so ETFs and inverse leveraged products, et cetera, swaps, they're there, they're buried, but they blow up every now and then. So neither one of those things has changed. Now, the market could chug its way to 26,000. I'm not saying it's going to go down today, but this setup for 10, 15% drops in very short notice is still there.
Okay. You're not reassuring our viewers, but I will continue with this. The NASDAQ, it's on track for its best week in 6 years. That tells me that the tech stocks are the place to put your money. But you're saying, no.
Well, tech stocks have performed very well, no doubt about it, but they're also more volatile than these other stocks. So everything I just said about, say, the broader indices, the Dow and the S&P, applies with more force, actually, to the NASDAQ. So that setup is there. Now, if you want some good news, the Powell put is in place. The question is, the J. Powell put, the Fed put. In other words, the Fed will...
What on earth are you talking about?
Well,
you just escaped the buzzer, and I don't know how you escaped.
Well, we had the Greenspan put 98. It cut rates twice in response to LTCM. The Bernanke put 2008, $10 trillion of swaps with the ECB. The Yellen put, she pushed back the liftoff in September 2015 in response to the Chinese shock devaluation. So the Fed put is always there. That's not in debate. The question is, what's the level? Right now, it would probably have to go down to 21,000 on the Dow, let's say, before Jay did something. Basically, they would pause on a rate hike.
If you just turned off my viewers talking about puts on the Fed, you'll never eat lunch on this set again.
We tell it like it is, Stuart. The viewers are not well served by Pollyannish thinking, as you know.
Ooh, well, there's a comeback. All right, Jim. Look, thank you very much.
Thank you.
Sir. Appreciate it. Okay, check those futures. I'm afraid to say we're deteriorating, if you want to put it like that. We were down about 10 minutes ago. Now we're down about 80, so watch out. Maybe Jim Rickards really threw a monkey wrench into the market. I don't know.